32 ways to quickly stop foreclosure, loan modification.
I'm Dave Dinkle, and for the past 47 years, I've helped homeowners just like you to stop their foreclosures. More than 1 million Americans have used my tips, tactics, and techniques to stop their foreclosures. The biggest reasons people lose their homes to foreclosure is simply they don't take action soon enough. Following video is an introduction to just one of those techniques.
A loan modification is a process whereby a lender modifies the terms and conditions of an existing mortgage so that the mortgagor, the homeowner usually, but not always, will be able to avoid foreclosure. They're designed for homeowners who have encountered a temporary financial problem that has been remedied prior to modification. If your financial problem has not been remedied, you may still get the modification. However, you're only getting deeper into a financial crisis that might have to be resolved by other remedies. When you stop making your mortgage payment, your lender will start contacting you by mail and by phone. It's in your best interest to start talking to your lender immediately and truthfully about what is happening to you. One option the lender may offer is to put your payments that you've missed on the back end of your current mortgage and keep the same amount of your current mortgage payment. This might be your best option if you want to keep your home, but the term of the mortgage will be extended, usually to 40 years, and the amount of interest you'll pay will be greatly increased. The lender may offer you alternatives immediately or keep checking on whether you've started a solution for your problem. Warning: the lender did an appraisal when your loan was 90 days late and knows if you're upside down or not. If there's determined that there's equity in your home and no other mortgages or liens against your home, you may be offered to sign a deed in lieu of foreclosure. Signing it will solve your debt issue, but it could easily be the worst mistake you could make. More on this option in a separate video on this single topic. If your lender allows a loan modification, you will simply continue to make your mortgage payments as you were previously, and it should be less than you were paying previously. But there is no guarantee this reduced payment will happen. Your credit will be adjusted to show you're current. Possibly any foreclosure activity will be removed, but previous late payments will not usually be removed. You need to request a loan modification package from your lender, and if you complete it and get it back to them timely, you may be able to stop your foreclosure. Allow at least 60+ days before your foreclosure sale date to start this process. The loan modification process requires a financial statement as well as a hardship letter, income verification, and other documents. The financial statement is theoretically used to see what you can afford to pay monthly, but more frequently it's used to find where you have money if the lender forecloses, so he knows where to go to collect his deficiency judgment. The financial statement can also be used by the lender to determine if they can charge you a lump sum up front for the loan modification process. If you're going to try and complete the loan modification package yourself, you should know it is complicated and requires extreme persistence to get the package accepted and completed from the lender. If you have a federally backed mortgage, Freddie Mac, FHA, VA, or Fannie Mae, you should have no problem getting a loan because the lender has his principal in the loan guaranteed, even if you ultimately default. While your foreclosure may be stopped, if you have an ongoing financial situation that isn't resolved with this modification, it's a temporary fix at best. If you try the modification route and are approved, make sure the lender doesn't show the new loan as a modification on your credit report. Get it in writing so you can dispute it later with the credit bureau if it comes to that. The typical modification results in the term of your loan being extended out to as much as 40 years instead of the 30 years you originally contracted for. A new interest rate that could be higher, but a payment that could be lower because it's offset by the longer term, and the amount of interest you pay is substantially increased. The biggest benefit is if you can reinstate your loan by a loan modification and later sell your home, you'll avoid the long-term interest payments, but your payoff could include a prepayment penalty by the lender. Thank you for looking at this brief introduction to just one of the 32 ways you might be able to use to stop your foreclosure. Now is your opportunity to take control of your situation, whether you are just contemplating what options are available or you're all the way through having already lost your home. We're the sum of the choices we make in our lives, and now's the time to make a choice that can positively affect your life forever. To get started changing your life today, simply go to davedinkle.com/32 ways.